Hey investor friends, I'm Michelle Markey, and today I'll share how the best investor, Warren Buffett, revealed his truly simple investing strategy and his advice for learning how to invest, because he believes so much in the financial future of America. And if you also want the best for your financial future, I hope you'll consider liking and subscribing to my video and YouTube channel, because Buffett gave this talk in 1999 at the Nebraska Forum when the stock market was at its all-time highs, kind of like it is today. And his investing strategy will never go out of style, where you can also incorporate his timeless investing strategies into your own investing practice so that you can also be financially successful. So let's get into what Warren Buffett said.
And I was wondering, how do you decide what you invest your time and money in?
Yeah, well, I like to find businesses that have good economics. Now, what are good economics? Well, good economics are a business that has some kind of a moat around it that makes its product or its service or its location or something a little more desirable to the customer than any other sort of comparable product. You know, the number one candy bar in the last 30 or 40 years has been Snickers. People don't fool around with different candy bars. They fool around with different length dresses, they fool around, with all kinds of things, but they don't fool around with candy bars because they figure, they're going to go in and lay out 50 cents or whatever it is and put it in their mouth. And they're not going to, for 50 cents and putting it in your mouth, you're not going to say, I'll lay out 45 cents and put something else in my mouth. So you find that very stable. And we like businesses that we think we can figure out where they're going to be in 10 or 15 years. I don't know where the information technology businesses are going to be in 10 or 15 years. I know where Snickers bars are going to be in 10 or 15 years. They're going to be selling just about this, the way they do now. I know where Wrigley's gum is going to be in 10 or 15 years. There's not going to be a lot of innovation in chewing gum. The internet's not going to cause people to quit chewing gum either. Gates may think so, but I don't think so. But it's predictability regarding the sustainability of a competitive advantage, something special about a product. So we look for those kind of products, and then we look for people that are running the business that are honest and able. And it's easier to find people that are honest and able than it is to find businesses that are going to stay wonderful for a long period of time. There are a lot of businesses that looked like they were going to stay wonderful that really evaporated over time. But that's what we're looking for. And the nice thing about it is we don't have to find very many. If we find one a year, that's terrific. Because you don't need 100 or 1,000 great investment ideas to do well. You need a couple. And the discipline is the most important thing. We don't need brain power. We need discipline. You don't need 150 IQ to do what I do. Thank God. You don't need 140. You don't need 135. You may need 115 or something like that. But you do need discipline. You have to wait until you see the fat pitch to swing at. Because investing is a no-called strike game. If I were a baseball player and I only like pitches 2 inches above my navel, some guy could learn that and he could pitch me, 3 or 4 inches below that, and I get called out on strikes because I never find a pitch I like. You can get called out on strikes in baseball. You have to swing at pitches that you don't even necessarily like, particularly after the count gets to 2 strikes. In business, you don't have to swing at anything. You can sit there and the paper says General Motors at 68, or it says General Electric at 115, or it says General Dynamics at 63. And if you don't like those prices, you don't have to swing. You can wait there day after day after day after day, and there are no called strikes. Now, when you swing, when you decide to buy something, then, if you swing and miss, it's a strike. But it's a marvelous game to be in because there are no called strikes, and you can simply wait for that one time in a month or 6 months or a year or 2 or 3 years when you really know what you're doing, where you like the price, where you like the people running the business, and then you swing, and you only need a few swings in your lifetime. So that's the way we try to pick businesses. We try to stay with things we understand. There can be all kinds of wonderful investment opportunities out there that I don't understand. I don't know what cocoa beans are going to do next year. Maybe you know, but I don't know. I don't know what crude oil is going to sell for. But I don't have to know. I just have to know the things. I have to know what I know. I have to know where the limits of my understanding are, what I call what my circle of competence is. And if I'm only able to evaluate 5% of the businesses in the world, no problem. I just stay within that 5% and try and find something. And most people get in trouble because in investments because they get itchy. They can't discipline themselves, and they hear about other people making money. Nothing upsets people so much as to hear about their friends making money. I mean, that's very destructive to discipline, because they think, I'm smarter than that guy next door, and he just bought that new car with the money he made trading stocks on the internet, so why can't I? Well, the answer is you can't over time. You will lose money if you trade stocks actively. And it's hard to exercise the discipline. But anytime you buy something, you should be able to take out a one-page sheet of paper and say, I'm buying General Motors at 65. I'm buying General Electric at 150 because. And you should write down the reasons. If you can't fill out the sheet, if it's because somebody told me about it at a cocktail party last night, that's not good enough. If it's because my broker told me about it, that's not good enough. You've got to have a reason for thinking that it makes an intelligent investment. You do the same thing if you're buying a farm or an apartment house. If you're buying a farm, you'd say, I'm buying this farm at $1,000 an acre because I think I can earn $60 an acre on it if corn sells at such and such and soybean sells at such and yield is such and such. And you'd figure it out. That's the same reason you buy businesses. And when you buy stocks, you're buying a little piece of a business. And that's probably the most important thing to remember in investing, is that when you are buying a stock, you're buying a little piece of the business. And if you are buying it at an attractive price for the business, for the whole business, you're going to make money. And if you aren't, over time you won't make money.
Wondering how, since the stock market's so high right now, if it'd be smart for us to get involved now or to wait till it goes down a little, or what?
Yeah, I can't tell you whether or not to buy stocks now generally. I think it's important that you save money, and whether you put it in the stock market or not, I don't think is terribly important. I think if you're interested in the stocks, you should buy it, and you've got a little capital, you should buy a few. I mean, I don't think there's any way of learning about them better than experiencing it. Doing it on paper isn't the same. I can guarantee you, if you lose money on paper or lose real money, it's a different experience. And so I think you'll learn more about yourself if you do it that way. I bought my first stock when I was 11. I was at Rose Hill at the time, and I bought 3 shares of City Service Preferred at 38, and it went down to 27, which is something I still remember, even though I was 11 at the time. And then it went up to 40, and I sold it. I made $5 on my 3 shares after commissions, and then it went to 200 and something. So, I probably remember that a little better than if I'd been doing it on paper. And I fooled around doing a lot of things between about age 11 and 19 in the stock market. I did charts, I did all kinds of technical analysis, I read every book I could get on the subject, and I didn't do that well. I didn't do terrible, but I was really just floundering around. But that meant by the age of 19, when I read Ben Graham's book, I was at the University of Nebraska in Lincoln, I went and bought this book called The Intelligent Investor. It had just come out, and it had an enormous impact on me. Now, if I hadn't done, in the previous 8 years, if I hadn't been all over the lot, I'm not so sure that book would have had the same impact on me. I mean, by that time, I was prepared to read Ben Graham's book, which changed my life financially in an incredible way. I mean, I wouldn't be up here today if I hadn't read that book. But part of life is getting prepared so that when something does happen that's significant, you can grasp the significance of it and know what to do with it. And I would say that first 8 years of fooling around, even though it produced nothing financially to speak of, produced a lot in terms of getting my mind prepared for when I really did read something that made sense. And so I was ready to accept it. And I actually went back and went to Columbia to study under Graham, and because of reading that book, and all kinds of things flowed out of it. So I would encourage you, if you're interested in the field, to do a few things. I'd still try and make them as intelligent as possible. I would try to stick with businesses I thought I understood. I'd still get out that sheet of paper, and I'd write, I'm doing this because, and just test my reasoning. And then I'd go back and read it a year later and see whether what you thought would be true turned out to be true. So I would always check myself. I believe in grading myself on everything. Doctors have postmortems, and they do it because they learn from postmortems. In business, people don't like to do postmortems. When I can be on the board of a company, and they can owners building plants or buying companies, and they never want 2 years later to run a check on how that decision turned out, because it can be unpleasant. But you learn from postmortems, and you don't want to learn. It's way better to learn from other people's mistakes than your own, but you got to learn from a few of your own too. And the time to do it is when you're young. High tech, information technology, whatever you want to call it, is changing the world, and it's going to change it in a very, very big way. It'll change. I mean, that's one of the things I think about in businesses we buy. We announced the purchase yesterday of a furniture retailer in Boston, in the Boston area. And, you know, I think to myself, what effect does this new world have in terms of the internet on furniture retailing? I mean, you have to think about questions like that. The changes will be huge. I played bridge yesterday with people all over the country, but I played it with people all over the world. I just sit down on my computer and I've got some popcorn there and I'm in khakis and a sweater, and I can have a bridge game in 30 seconds with people all over the world, and no cost to it, basically. You know, that's a lot different than trying to arrange a game with 4 people in Omaha, you know, on a day when one guy wants to play golf and another wants to watch baseball. And I mean, it changes things in a huge way. We are very fortunate. I mean, it's in the degree to which the United States leads the world in this area. I mean, we have a lead. It's hard to think of who's in second place. And 15 or so years ago, this country had an inferiority complex. It'd be hard for you to remember because you weren't old enough to be around then, but in the early 80s, we were wondering whether the Germans and the Japanese were going to own everything, and that they were going to make all the steel and they were going to make all the cars and everything else, and the television sets, and we were going to flip hamburgers. That was the standard line. And just imagine in a short period like 15 years how that's changed around. In an important way, that's changed because of this information revolution, where we, like I said, I don't know who you would name as being in second place in the world, but here's the most important industry in the world, and the United States has this incredible position, and we're moving all the time with that position. So I think that argues for a terrific future for the world over time, and I think it argues even more for a terrific future for this country.
And maybe one thing that's changed from when Warren Buffett said that it's hard to think which country is in second place, I can think of at least one big country that might be in second place that Charlie Munger is really bullish in investing in, even though Warren Buffett might not be as bullish because, like Buffett said, never bet against America. So there are plenty of investing opportunities in the US as Warren Buffett continues to invest in plenty of American companies. So never fear if you're wondering if the US is in second place or not. I think it's still well assured in its first place for now. And also, one of the other key takeaways I took away from Buffett is that we should be willing to evaluate our financial performance. So what we should do is write down our investment case for any investment we'd like to make, whether it's in stocks or in houses, and then write down the reasons why we invested and what were the risks, like what were the reasons why we shouldn't be invested in certain securities or assets, and then evaluate over some period of time how we performed in terms of our judgment. And it should be for reasons that go beyond whether the stock price went up or down, but also how the business itself did, and was it able to provide increased free cash flows to the shareholders, or did the business do positive things for society? There are many factors that we can use to evaluate our performance as investors. So I hope this video was helpful for you, and if you enjoyed it, please be sure to like and subscribe to my video and YouTube channel, and I wish you well on your journey to being the best investor you can be. Till next time.